What's going on, guys? Welcome back. What a crazy day today for Tesla. Not so much for the overall market, but I am very interested in something I am seeing here on the SPY ETF on the overall market, and I figured it would be a great video to go ahead and share it with you. This is going to be a quick one, quick analysis, give you guys an idea of where my mindset is here. I still believe there is potentially more upside in this market, and I want to break down why in this video. Something I'm very closely watching. I'm using to tailor my positions, and I figured this would be a nice quick video to share for you guys to hopefully give you an idea of what could happen on this market. Possibly, not for sure, but that is why we do analysis. We do our analysis, we trust it, we trade off of it, we take calculated risks. That is the name of the game. I'm thinking that tomorrow might be a pretty interesting day and a very telling day for what could happen into next week. This is an important candle that was put in today on the SPY, and that is why I believe this video is so important. So press that like button, subscribe to the channel. Let's go ahead and jump right into the chart. So we're going to go ahead and start our analysis today on that daily chart, top level view, get that bigger picture, that macro view of the markets, and then sort of break this down because in the short term, there are still some levels that I am watching to potentially cause the markets to fail, which is something that is very important, and I think you should definitely pay attention to. But I also want to make sure I understand the bigger picture, and that's why we're going to go ahead and start here on the daily chart. Now, on the daily chart, guys, there are two huge levels, and I'm calling them my major pivot levels that I am very focused on the SPY. These have been very influential spots with the market to help it continue higher. Now, you can see right here, previously we had that major rejection that caused the markets lower. That was very big. Right here, we had another major rejection which caused the market lower. That is very big as well. That is the $565 level on the SPY ETF. To be exact, it's right around $565.40. So this was a very important major previous rejection on the SPY, which kept us lower in July, which kept us lower in August, right? We saw that very clearly. Now, in September, we saw the markets break above that level. Right here on September 20th, we saw a break above that level. Really, it was on September 19th. So we had that double top rejection at that 565, and we had a break above that level on September 19th and held above it on September 20th. Now, we got a little bit more upside up to this 575 level before rejecting back to the downside. When we rejected back to the downside off 575, we see that the previous rejection points right here turned into support and caused the market to squeeze higher and make new all-time highs. So this is a very major pivot spot here on the ES or on the SPY ETF. That number one, right, the first one is 565. Right here, 565. 565, this is a huge spot on the market. Now, this level is not so important right now because there is another level which is closer, which I believe is the important one to be watching, and that is 574.50. 574.50 on the SPY ETF, possibly around the 575. I think this is the must-watch level as of right now. This is, if I zoom into this daily chart, this is the previous high right here that caused rejections, which put us down into that retest level at 565, right? So we had that rejection at 575, bringing us down into 565, which caused the upside move. Now we can see here after this upside move, over the last few days, we have come back down and tested this previous high. And what we need to be watching now is, does the SPY ETF maintain above this previous high right here at 575? Does it turn it into a new low right here? And does that create the next upside move? This would be the exact same thing that happened right here. It would be the exact same move. This break over these highs, the retest into those highs, the hold, creating the next upside move. The break above these highs, the retest into those previous highs, and the hold, which would create the next upside move. This is very clean right now, and it's something to be paying attention to. In my opinion, how I'm trading this is that as long as the SPY is over 574.50, as long as we're above that level, I believe there is every reason to look for this level to create that next long opportunity the same exact way it did it right here back in early or late September and early October. This is identical to this move, and it would be extremely clean to see that play out again. Now, on top of that, there's one more thing I want to point out, which gives me even more confidence that this could play. It is the daily 20 SMA, and you guys have heard me talk about this quite often. The SPY pushed higher and sort of expanded past that daily 20 SMA, which is right here, right? That daily 20 SMA, it started to expand past it. When we get an expansion over that 20 SMA, the markets typically like to come back down and test it, right? And use it as sort of that floor and that launch pad for the next move higher. So we can see previously we had not only that retest of previous highs right here, we had that daily 20 SMA supporting price action, creating the upside push. This is the exact same thing that is happening right now. We can see this is the previous high that we have come back down to, and we now have that daily 20 SMA supporting price action after the test at that 575. This is very, very clean to me, and this is why I'm staying long. I have to use this analysis, if I trust it, to trade and to trust, right? This is what trading is all about. I very much trust the break and retest strategy, and I very much trust that these potential highs, which held here, could be the same thing that happens at that previous high that could happen here, right? This looks very identical to me, and this is why I'm staying long, and this is something I would be paying attention to. Now, I want to talk a little bit about yesterday's candle and why I think it's so important. If we go down to the 4-hour chart, you are going to see that that 4-hour chart, the 4-hour low, was exactly at that 574.50 level. We had a very aggressive sell-off yesterday right into this previous high, which we just talked about. Of course, this low as well. And you can see that 4-hour candle right here, which moved lower aggressively, a heavy sell-off intraday yesterday, which got bought up very, very aggressively as well. That was exactly at the 574.50, which is the exact previous highs right here. That was very telling to me. The next thing I want to talk about is the 4-hour chart from today. The 4-hour chart from today pulled back once again, saw that downside come in, but where did it hold? A higher low above that daily 20 SMA, which is actually where I went ahead and caught more long exposure today. If we look at this 30-minute chart, we can see that 574.50 tap, which got bought up very aggressively. Downside again today, which got bought up very aggressively at that daily 20 SMA. And I'm believing and I'm trusting that both this 574.50 demand down there and this 20 SMA is starting to find the buyers and possibly creating that next major long opportunity. This is something I would be watching very, very closely. 4-hour chart, you guys can see structure is very much intact. Previous structure here. Here's your structure here. Previous highs trying to turn into new lows. But the key here, guys, is that if you are going to want to catch this potential long, you have to expose yourself to longs near the channel low, near the structure low. We cannot wait for this market to squeeze higher and start chasing longs into the highs. So if you believe that this could be possible, if you trust your analysis, you have to expose yourself to the longs down in this zone, right? This is where risk reward takes place. We cannot wait to be late to this move, let this squeeze higher, and say, man, now I like it, right? Oh, now the SPY's at all-time highs. Now I'm going to buy it, right? No, right? If we like our analysis and we're going to trust it, we have to trust that these previous highs are trying to turn into new lows. And if that's what we're looking for, then we need to start exposing ourselves to longs in this bottom, sort of down in the bottom side of this structure. And that's sort of what I've been doing, as you guys have probably heard me talk about in some of the positions that I've shown, right? So 574.50, this is a huge level. I'm very interested in this. You can see it once again on the daily chart. Previous double top high. Here's your low. Here's your high. Here's your potential low. 20 SMA sort of curling higher with the market, right? 20 SMA, 20 SMA, creating that support. This is where I need to see the market hold. Now, very clearly, it is very clear where the market no longer looks bullish to me, and that is about as clear as it can possibly be. If you fail back under that previous high and you start to reject it, that is game over for me, right? For my positions, that is a loss for my positions, and that is probably game over for the bulls in the short term. If we fail back under that major pivot at 574.50, you are most likely trading back down to the 565 level, and it makes it very easy to know when you're wrong, right? And so that's why I'm willing to take this risk. Now, again, this is the daily and 4-hour time frames, but there are some short-term levels I want to talk about that you need to be paying attention to into tomorrow to make sure that the confirmation is fully there. Now I want to go ahead and talk about that right now. The level that I believe you need to see the SPY get over, number one, is $580 per share. I believe this is a must-break level for the SPY. This is a level that I would want to see the bulls get price action back above to really trust that that next move is coming. Now, I still like those demand lows, and I still think the macro picture is definitely showing that demand down at 575 and at that 20 SMA, but there is still this 580 level that could fail. This is previous highs here, previous sort of consolidation here, and we have this very distinct low from Tuesday of this week, right at $580. We can also see today, guess what? We closed right underneath that level. So, job's not done yet, right? I don't have full confidence that we're just going to squeeze higher and keep going. This might take more time. However, the reason I make this video is that as long as the SPY is over 574.50, and as long as we're consolidating above this demand and above this 20 SMA, this is still a very interesting long. If we get over 580 and we hold that, then I believe it's off to the races. Now, of course, if we get over that 580 level, of course, we're still going to be cautious of the all-time highs, which is at 585, but that would ultimately be the target. If that SPY can get over 580, start to turn that into valid support above this Tuesday low, above these highs here, start to maintain above some of that consolidation, I believe if you start to see buyers step up above 580, your target at this point would be that 585. So the last thing I want to say before we log off here is that number one, analysis is subjective. Everyone has their own analysis. This is my analysis. This is how I choose to play the market. This is how I decide to trade my risk. This is how I decide to use the money in my portfolio. I'm planning to hold longs as long as we're above that major pivot, which is at 574.50. And I'm positioning myself to give it time. This is not something I expect to happen overnight. This is not something I expect to happen today, tomorrow, right? This is something I want to stay confident in and maintain a long exposure. That is usually with at least a month out on options contracts. That's with shares, right? This is a slower analysis. This is a daily chart analysis. This is not a 2-minute candle scalping setup that you could take advantage tomorrow as soon as the market opens, okay? This is a daily chart analysis that will potentially take some time to set up, but there is a very clear reason to stay long right now, in my opinion, above 574.50. If it breaks, the whole analysis breaks and the market moves lower, and that would be a great then short idea under that 574.50. This is the bottom guardrail, the major pivot that must hold, and as long as it does, long exposure will remain in my portfolio. Analysis, once again, is subjective. It's subjective to what you believe. You have to believe it. You have to trust what you're looking at to successfully risk money and make money. If you don't like my analysis, do not let it influence you trading tomorrow. Do your own analysis, build a trade plan, build a game plan, trust it, and see if it works. That is what trading is all about. It's calculated risks. If you like it, you have to shoot. Shooters have to shoot, but they also need to be calculated. So I hope you guys enjoyed today's analysis. This is very interesting to me. I would be paying attention to this daily chart, this big hammer off that 20 SMA today, and that 574.50 level. Keep an eye on this level. Make sure it's on your charts. Let's see what happens tomorrow. Press that like button, subscribe, and I will see you guys on the live stream tomorrow. Peace out.